Okay, the Fed just cut rates by 25 basis points, which was pretty much expected. We can see this shift in liquidity and volatility. So just to recap, if we go back in our prior clip, we just mentioned that we noticed a divergence here. So we had our models forecast a long institutional bias, meaning that there was a net imbalance to the upside in the Dow coming into the session. I think that's to be expected if you believe that the Fed was going to cut interest rates. So then we saw the Dow catch a bid early. However, even though our opening range forecast was exceeded, our liquidity forecast was not exceeded. In fact, the amount of loss that we traded in the opening range was not only less than our liquidity forecast, it was less than the 5-day moving average. So significantly less than expected liquidity on this up move. So we were interested in seeing how order flow would shape up going into and at the FOMC announcement. So as to be expected, you expect this volatility and liquidity to drop off just ahead of the announcement, as firms are going to wait to commit additional capital until after the announcement. So then we saw liquidity, pretty level off, as well as volatility. And then at the announcement, we see these significant spikes relative to the forecast. So then we're just monitoring exactly how volatility and liquidity are going to shape up going into the press conference. So we got the initial reaction here, but naturally there can be, you would expect more profound moves, a stronger directional move at the time of the press conference.